Hi, this is Jim Bush. It's been a few weeks since I've done a Growth Trader Friday update, and today I'm going to try something new. I'm going to do this as a video instead of as a column. So I'd like to hear your feedback as to whether you prefer this format or not. First of all, what I'm going to do is I'll just give you some thoughts on just the composition of the emerging growth rankings and some of the themes that I'm seeing there. And what I'll then do is I'll move on and give you a little bit of a sneak peek at the new additions that are coming on Monday. So, what I'm doing is I'm starting off with this week's rankings. And the first thing that I'm sure many of you have noticed is that it's still dominated by the housing and construction stocks. These stocks have seen an acceleration in their rate of outperformance dating back to early September, late August. And while most of them are still quite strong, one thing I'd like to emphasize with this is this actually isn't a new theme. It's actually pretty mature at this point. And what I'll demonstrate for you is this here is a chart of the home builder ETF versus the S&P 500. So it's basically done as a ratio. So when the XHB is stronger than the S&P 500, you'll see the line moving up and to the right. When the home builders are weaker than the S&P 500, you'll see it moving down to the right. And what you'll see is, dating back to October of last year, 2011, that's really when the outperformance in the home builders started to become evident, and it continued steadily throughout the first half of 2012. And then beginning in August of 2012, it really kicked into a higher gear. That trend accelerated markedly from where it was before, as the lines show. It's eased off a bit, in the last month, in December. But generally speaking, although a lot of these home builder stocks really started to get talked about this fall in particular, this trend has been going on for quite some time. So I'm not going to make a prediction as to when it's going to end, but just be aware that this is a fairly mature theme at this point. Another theme that I've noticed with the emerging growth stocks and just the market in general is that emerging market stocks and ETFs have begun to demonstrate notable relative strength, really beginning in September. And I have another chart here that displays that. This is the EEM, Emerging Markets ETF, versus the S&P. And as you can see, emerging markets were underperforming for a long time prior to basically this fall. In September, the emerging market stocks started to outperform. And the reason why I'm bringing this up in the context of emerging growth is that we've started to see a number of emerging market names pop onto the rankings. And for example, on Monday, we have another 3 emerging market stocks showing up on the emerging growth list and bring the total to 6 just in the top 25. So this is very unusual. We typically don't see that many emerging market stocks pop up on emerging growth. So I just wanted to point that out to you, that the ETFs have been outperforming since September or so, and now some of the individual stocks are really starting to show real relative strength. So look for that in Monday's edition for those 3 new names. I'll briefly tell you which ones they are later on. So those are the 2 major sector rotation themes that I'm seeing. More broadly, right now, it's a little hard to get excited about this market, even setting aside the fiscal cliff headlines. For the most part, it sort of has that holiday kind of low quality feel to it. Big rally, the biggest thing right now is you're seeing a lot of big rallies and left for dead big caps like RIMM, Nokia, First Solar, Green Mountain, Acme Packet, Netflix, not to mention significant 1 month outperformance in solar stocks, online education stocks, and some tiny biotechs. As a general rule, whenever the solar and online education stocks start to outperform, that's a red flag for me. And offsetting this low quality action, at least to a certain extent, is some more bullish moves in sort of traditional large cap leaders like CRM, NetSuite, LULU, RAX, and particularly some European names like ARM Holdings and SAP. It's been forever since SAP has become a leader. So that's really sort of kind of the sector macro view I have the emerging growth list. I mean, it's very, very mixed action. You have a really mature theme, the housing and construction that continues to dominate the emerging growth rankings. You have a much newer theme, the emerging market outperformance that's starting to become evident on emerging growth. Again, with Monday's update, you'll have 6 new names there. So, very mixed, and I guess that's not so surprising with, the end of the year coming up, and especially with the fiscal cliff, being bombarded by those headlines constantly. So, just a very uncertain time. And that leads me to just sort of another observation. And really, over the past few months, there's been a notable lack of compelling new ideas appearing on the emerging growth rankings. Just keep in mind that emerging growth is a quantitative system, so you take what the market gives you in that sense. And when I see a lack of quality ideas showing up on the rankings for sort of an extended period, it really tells me more about the market than it tells me about you know kind of the names in particular or the system itself. It just tells me that the market isn't really giving you much to work with right now in terms of quality small to mid cap growth ideas. There just aren't that many at the moment. So, what I will do now is I'll just give you a brief look at, I'll just pull up a stock chart here. Just give you a brief look at some of the new additions. One of the first is American Woodmark. This has been coming in this week, but it still shows strong relative strength. And this one makes our cut really more because its average daily volume finally got up to our threshold. It's been running for a while. They're basically a furniture, a furniture company. We have a few others on the list recently. It kind of ties back into, again, that whole home builder, recovering in the housing market theme. Now, another one we have, another new addition on Monday, is a Mexican airport stock. Again, emerging market. This ties into the emerging market theme, the outperformance there. And this one, there's not a whole lot that you can't like about this one. I mean, just a real steady mover. BMA is an Argentinian bank. This one's kind of intriguing because Argentina has been such a basket case for so long that to see one of the banks outperforming is at least warrants a closer look at that one. And we'll have more to say on it on Monday when we publish our company description. And actually, what sort of makes this even more interesting is that we have another Argentinian company, Argentinian oil company, PZE. Same thing. The Argentinian economy has been, so bad for so long that, this warrants a closer look to see if there's actually anything going on there. Another new name is GEOS. This is the old OYO Geospace. It was spun off earlier in the year. Now it's just known as Geospace Technologies. This is a seismic company. Generally, the seismic companies, there have been a handful of them over the years that we've been aware of. They generally don't trend well, but what's interesting about Geospace is that they have a number of big contracts that are revenues are just starting to get recognized in the new fiscal year. So it has as you can sort of see by the stock itself, it has some major fundamental catalysts that are starting to be realized, and the stock is running on that right now. So there's some interesting things going on with this one. Out of all the new names on Monday, this is probably the most interesting, I think. Another one, new name is Rudolph Technologies, RTEC. For people who follow semis, you've probably heard of this one before. It's both a front end and back end equipment provider. This one is highly cyclical, like all of the semi stocks, but they have ties to the Apple food chain, which as of today, with all those getting knocked down, it's surprising this one's holding up so well. But also they've really been gearing their company much more towards the type of systems that are used in mobile chips, so tablets, smartphones, that sort of thing. They're really pushing their company in that direction over the last couple of years, and the stock's been outperforming the group. There's the daily chart of RTEC. If you look at a weekly, you'll see that it's sort of on the verge of what could be a multi-year breakout on the weekly chart, if it can keep going. So again, highly cyclical semiconductor. Usually the semiconductor stocks don't, especially the equipment ones, don't work. But this one is tied to some pretty good end markets. So it's again worth looking into. We'll publish more details on it on Monday. Another new addition is VVI, Viad Corp. This one's gone straight up. In fact, I would probably avoid this one until it pulls back. Don't really have an opinion on it. They're in sort of commercial services sector. Definitely a little too extended for my tastes right here. And finally, SNFCA, Security National, is a bank. This also, I think, is a little too extended for my tastes right now. And it's a financial. I don't generally like the financials that much. They don't tend to trend very well. But, we'll have more details on this one on Monday. So anyway, those are those are the new additions on Monday. Just to recap: AMWD, ASR, BMA, GEOS, PZE, RTEC, SNFCA, and VVI. So that basically wraps it up for my Friday update. If you have any feedback you'd like to send me, there's a link on the page for it. Especially if you prefer the video format or prefer the column format, I'd like to hear your thoughts. So I'll leave it with that, and have a good weekend.